Welcome back. Joining me as we wrap up the day's markets action is Nick Kunze from Sanlam Private Wealth. Nick, thanks so much for joining us today. Now, global markets have ended February on a high note, and most global stocks have been posting monthly gains since November 2023. Of course, this was on the back of those Fed rate cut hopes. Moving over into 2024, those rate cuts still haven't materialized. Now, despite that, we have been seeing some encouraging data as well as the AI frenzy kind of boosting sentiment. Now, just walk us through the factors that have boosted markets.
Yes, lots to digest. I mean, first and foremost, to your point about inflation, I mean that is correct. You know, we've been getting some recent inflation prints that have been, a little bit more encouraging. Yesterday, the PC was in line, and off the back of that, those rate expectations. Though, to your point, bearing in mind that I think they had factored in about 6 or 7, was ridiculous sort of rate cuts this year. That's been pushed back to about 3, and probably the first rate cut only coming, maybe in June if we're lucky. So off the back of that, you would have probably thought the markets would have been a little bit on the back foot, but that has been sort of well balanced, I think, to your point, what you said about AI and NVIDIA's earnings, really strong tech sector. Only last night, S&P 500 and the Nasdaq hitting sort of new record highs. So you've got a real sort of balancing act between the two. And at the moment, valuations and earnings seem to be sort of outweighing or trumping the inflation expectations for now.
Sticking with inflation, over in Europe, we had Eurozone inflation easing to 2.8% in February. Core inflation also softened. Surely this just adds some comfort for the ECB, right?
Definitely. I mean, if you had to look at a graph from a year or two ago, those inflation numbers in Europe were sort of north of 8%. So to get down near where the ECB wanted to be, which is nearer 2%, and Madame Lagarde speaking at Davos a month or so ago, talking about maybe only in sort of June as well, there's summertime where we get a sort of a rate cut. But at this rate, it might even be sooner. So I think in general, everyone's got to be, well, certainly central banks have got to be a little bit happier with the inflation sort of numbers and trajectories that have been coming up recently.
Now, Nick, back at home, the local currency recently recovered from a 4-month low, but it still remains firmly above that 19 Rand mark to the dollar. Is this mainly being dragged by external factors like the stronger dollar?
I think not just so the dollar. I mean, there has been a little bit of a news vacuum locally, which you would have always said it was just the dollar, the stronger dollar was knocking the rand. But, you do get the sense that after the budget a week or so ago, the sort of general, I think almost, the sort of aftermath post-budget, people sort of looking at it and going, well, actually, we're spending more than we're getting in. Tax receipts, although they've been good, are a little bit softer. So in general, I think that the well-received budget, I think that gloss coming up a little bit. So yes, there is a bit of a stronger dollar theme, but also I think there is some local factors coming in. There's concerns now about growth prospects and, what is going to be happening on our local, on the ground here. And that's contributed to as well, because you would have seen, I mean, that was under 19 when our finance minister spoke, and it's now sitting, back at 1920 odd. So, unfortunately, it's sort of our local currency is suffering a bit.
Right, now, in company news, Northam Platinum's reported downbeat interim earnings, with those earnings slumping 93%. This, of course, on the back of lower metal prices, like many of the other PGM players that we've been seeing. One thing I found interesting, though, Nick, is that Northam is one of the few PGM miners that isn't cutting jobs. Is this just a reflection of good cost management?
I think it is. It is, and disclosure, it is one of Sanlam's sort of our top picks in that sector. So we do like the management. We do engage with them. I think they're very well run business. Also, I think their sort of their quality, the higher grade quality, is better received, and their use of capital over the years has always been better. I mean, they haven't really ever even paid out a dividend for many years. It's always been in favour of buying back that Plat business in the past. But today, paying a little bit of a dividend, cash flows seem to be a little bit better. And as you said, I mean, good news. So, I mean, no one wants to see job losses. So they haven't actually announced any sort of headcount cuts, although there was quite a big chunk of capital spending they're going to come back, sort of cut back on. But that was to be expected. And, no real surprises. And I guess the next question is, when are we at the bottom of this PGM cycle? I think we all want to see this.
As you mentioned, no real surprises, but the last time I checked, that share price was deeply in the red. Is the share price just being battered by the back of the JSE being in the red?
No, I just think the outlook is so negative. It was sitting, I think you're right, it was about 105, 106 rand a share, or even lower at one point. It's just, the hits just keep on coming in that sector. And Northern, unfortunately, a large portion of the basket of their revenue generation coming from the likes of rhodium, which is down, close on 80%. So, they're a little bit more hit than the rest of them. But, at some point, you're going to find a bit of a flaw in this market. But for the time being, that whole PGM basket is really sort of, on the back foot for the whole year.
They've all kind of taken a battering this year, Nick. Now, before I let you go, what's your stock pick?
Try a totally different side of the sector. We're going for ShopRite, the retailer. We've seen in earnings season the last week or two, we've had the likes of Pick n Pay's come out. We've had Pepkor, a few of the others. And out of all of them, dissecting all of them, ShopRite, with its margins maintaining almost double everyone else's, they certainly seem to be picking up market share. And against what I think has been quite a resilient consumer, even with inflation where it is in South Africa. You want to own the best of breed, and ShopRite, we feel is that particular counter. So ahead of earnings announcements, in fact, is going to be coming out next week. So ahead of those announcements, I think around about the sort of 157, 158 is worth a buy.
Nick, thanks so much for your time and those insights. That was Nick Kunze from Sanlam Private Wealth.